Welcome back to 7-Minute Options. In this episode, let's take a look at a few more YOLO type bets I have on Square. And again, yes, I am bullish on Square, but it's highly speculative. This is not investment advice. Trades you make are your own trades, yada yada. You know this, you know the spiel. All right, I'm not recommending you actually do any of these because these technically are not very good trades. Again, I try to limit these types of YOLO trades to a very small percentage of my portfolio, like 2%, maybe 3 tops. But here's a good example again. So in the previous episode, we looked at this one down here where I sold the 150, 145 put spread as a credit put spread. I got some money for it and I used that money to buy an out of the money debit call spread. And I did the same thing in this one, but I'm kind of regretting it a little bit. So let's look at some of the mistakes I made on this one. This one I opened up 95 days ago. So I've had this position for over 3 months. And right now I am $700 in the hole. So what I did 3 months ago is I sold a 240, 230 put spread, right? Credit put spread. I collected quite a bit of money on it. You can see the difference here. It's like almost $400. And I used that money to buy a 10-point wide call spread, and I collected a net credit of 50 on the whole thing, right? So yes, it's locking up $1,000 of buying power, but I got 50 credit for it. And this is what it looked like on the actual, on the actual table. If I look at it, that one is a June 18th expiration. So there's my $10 wide put spread, right? 240, 230 put. And there is my $10 call spread. And at the time, if I look back on this, I opened this 3 months ago. If I look at the chart 3 months ago, Square, this was opened up back in January sometime. Yeah, Square was up here, right? Square was in the 260, 270 range. And at that point, I figured, we're up in the 270s. Square was definitely on an upward trajectory, and I was very bullish on it at the time. I still am. But since then, Square has had a bit of a pullback. So right now, my put spread is underwater. But you can see Square has been making a bit of a comeback. About 5 days ago when we bottomed out there, I was more than $900 in the hole in this position. Now that Square's coming back, I'm minus 700. At this point, there isn't a whole lot I can do. So I have 24 days until expiration, and there is no positive extrinsic value left. So as you can see, the put spread, the underlying has gone through both the short and the long of the put spread, right? I'm well below 230 right now. So right now my extrinsic value here is negative, which means I can't roll this for money. So even if I try to punt this down the road, I would have to pay money, right? In this case, I would have to pay $65 to buy myself another month on top of the 24 days I have, right? So that would push me out to 52 days. So do I want to pay $65? Well, the other problem is because this is a debit call spread and it's not in the money, I can't roll that either, right? I gotta pay money to roll it. This would cost me only $20 to roll it. So the question I have is, okay, do I want to pay $70 and hold this position for another month beyond the 24 days? And I'm not terribly excited about doing that. I might just take my licks and close this position. Back 3 months ago, I would have needed this thing to hit 300 before I get into the really good profits here. So, it didn't happen. I didn't give myself enough time. This was only 4 months to expiration when I opened it, right? And I should have given myself more time. You can see that the one I opened up after here, I gave myself a lot more time. I gave myself almost a year. If I want to look at how this actually looks in terms of the analysis, the curve, right now, here's the flag. You can see as long as it stops in between 240 and 300, I walk away with $50 credit. I'm okay with that. Remember, the stock was right around here in the middle, around 270 when I opened this position. Had it gone up to 300 and beyond, I would have made $1,000 more than the 50. So 1,050, you can see there is the maximum. But right now, instead, the stock went down here. Not a whole lot I can do. I'm just going to hold this for 24 more days and see what happens. I really am not a fan of paying money to buy more time. In other words, for me to pay another $70 just to hold this position for one more month, ironically, that doesn't even cover my 50. In other words, even if it does go up above 240 and I would collect the 50 credit, like that still doesn't even pay for that 70. So I would, yeah, at that point, it's just, I'm throwing good money after bad. So, you know, I made some decisions, some very bullish assumptions on the setup. My assumptions were wrong. That happens all the time. So be it. This other one, this butterfly, you can see this is 2 years out. This, I mean, you want to talk YOLO. This is YOLO. This one here is essentially a butterfly. What I did was I sold 2 calls and I bought a call on either side. 20 points on either side. So that one is 605. Let's look at that and see what that looks like on the table. So that one is way away here in 2023. So you can see I sold these 2 calls and I bought this one, I bought this one. But you can see here, these are 20 points off. I mean, that's $2,000, right? And that's important because that's a lot of money. And this thing cost me very little to put on. So I was able to put this butterfly on for $38, right? And you know, what is this doing for me? Well, if I look at the actual analysis here, let's look at the curve. Let's select that butterfly, which is out here. All right. So if I think Square is going to go up to like $370 a share, and remember, this is 2 years away, right? Almost 2 years away. In theory, you know, I could make $2,000. The reality is, it's kind of like a lottery ticket where it has to land exactly on 370 on the day of expiration to collect the 2,000. So I know I will not collect 2,000 on this. But if all of a sudden Square starts moving, right, I might be able to hold this for, let's say, a year or so. I might be able to sell it for $500 or maybe even $1,000 if Square starts moving up quickly, and I can hold this for another year for the value to come in. So this, you know, if I collect 500 on this, I'm happy. If I can collect 1,000, that'd be really good. I don't have a realistic expectation of collecting the maximum of 2,000. But you want a cheap way to go, you know, go long on a stock. This is the way to do it. Again, this thing only cost me $38. The reason why, again, I'm not a huge fan of these. I mean, these are fun, you know, and I want to spend $38 on this. Go for it. I mean, it's fun. The downside is it does introduce volatility into your portfolio. This is what we talked about during the last episode, is these options prices go all over the place, right? It's generally a very wide market. If I go back to the table on this one, my goodness, $1 wide here, 95 cents wide here, 80 cents wide here. And so as the computer tries to estimate the midpoint of these three to get the total value of that position or the current value of that position, this jumps all over the place. So my day-to-day P&L or my total P&L, it just introduces a lot of volatility into my P&L. And even for that reason alone, I try to keep this absolute minimum. The other thing is, it's hard for, you know, stocks to almost double in 2 years. I don't care what kind of stock you are. It's hard to pick those kind of stocks. So I actually have a realistic expectation that I'm going to lose $38 here, right? Or maybe I'll buy it back for like $1 or something. But I'm going to lose most of this money. Again, this is like a YOLO lottery ticket type thing where this $38 could turn into 500, maybe 1,000 if my bullish outlook on Square is true. Again, this is mainly for entertainment. This is not investing. This is not even smart investing by any chance. This is purely for entertainment. And again, I don't recommend it. But anyway, if you guys want to see what this looks like, this is what it kind of looks like. All right, ask me again in 2 years how this worked out. All right, or keep your eye on this channel. All right, thanks. Bye.